Imagine this. You put just $100 into crypto today, and by the end of the 2025 bull run, you're sitting on a fortune. Sounds crazy, right? Well, history says otherwise. In past bull runs, people who started with small investments ended up making life-changing money. But here's the catch, not everyone wins. The crypto market is fast, unpredictable, and full of hidden opportunities. So, how do you position yourself to make the most of this bull run? That's exactly what we're diving into. But before you rush in, you need to understand what's really happening in the market right now, because this bull run isn't like the last ones. Crypto is booming again, but this time, it's different. The 2025 bull run isn't just another hype cycle, it's driven by real, game-changing factors. First, institutional adoption is at an all-time high. Big players like BlackRock and Fidelity are pouring billions into Bitcoin ETFs, making it easier than ever for everyday investors to get involved. And guess what? More demand means higher prices. Then, there's the Bitcoin halving, which happened in April 2024. If history repeats itself, this event could be the fuel that sends Bitcoin and the entire crypto market skyrocketing. In past cycles, halvings have triggered massive price surges months later, and 2025 could be no different. On top of that, governments and regulations are finally catching up. Instead of banning crypto, many countries are now embracing it. The US has given the green light to Bitcoin ETFs, and even nations like El Salvador and the UAE are making crypto a major part of their economy. So, with all these forces lining up, the question isn't if crypto will explode, it's how high will it go? And more importantly, how can you take advantage of it with just $100? The answer might surprise you. You don't need to be a millionaire to make serious money in crypto. In fact, some of the biggest success stories started with just a few dollars. Back in 2013, a Reddit user famously invested $27 in Bitcoin years later. That tiny investment was worth over $1 million. Even during the last bull run in 2021, people who put $100 into coins like Solana, Shiba Inu, or Avalanche saw their investments multiply by 50x, 100x, or even more. Why does this happen? Because crypto is unlike any other market. When the hype kicks in, prices can skyrocket overnight, and a small, well-placed bet can turn into life-changing money. But here's the catch, you have to know where to put your money. Not every coin will explode, and plenty will crash and burn. So, which cryptos have the highest potential in 2025? Let's break down the top projects that could turn a small investment into something massive. Not all cryptos are created equal. Some will explode, while others will disappear into oblivion. If you're starting with just $100, you need to be smart about where you put it. So, which coins have the highest potential in 2025? 1. Bitcoin, BTC, the king of crypto. Let's start with the obvious, Bitcoin. Every bull run begins and ends with BTC. With institutional investors now piling in through Bitcoin ETFs, demand is skyrocketing. Historically, after every Bitcoin halving, we've seen a massive rally, and this cycle looks no different. While BTC might not deliver 100x returns, it remains the safest bet for steady gains. 2. Ethereum, ETH, the backbone of DeFi. Ethereum isn't just a cryptocurrency, it's the foundation of Web3, DeFi, and NFTs. With Ethereum 2.0 making transactions faster and cheaper, ETH is set to play a massive role in the 2025 bull run. Many experts predict Ethereum could hit $10,000 plus the cycle, making it a strong investment. 3. Solana, SOL, the fastest blockchain in the game. Solana was one of the biggest winners in the last bull run, going from $1 to $260 in 2021. Now, it's back in the spotlight with insane transaction speeds and growing adoption. With new projects and major partnerships, SOL could be one of the best performing altcoins again. 4. Layer 2 and AMP, AI coins, the wildcards. The next big winners might not be obvious yet, but Layer 2 scaling solutions like Arbitrum, ARB, and Optimism, OP, are revolutionizing Ethereum scalability. Meanwhile, AI-powered cryptos like Render, Arendar, and Fetch.ai FET are gaining traction as artificial intelligence becomes more integrated with blockchain. The key? Diversification. Instead of going all in on one coin, spreading your $100 across a few high-potential projects increases your chances of hitting a major winner. But just buying isn't enough. You need a strategy to maximize your profits, and that's exactly what we're diving into next. Throwing money into crypto and hoping for the best? That's a rookie mistake. If you want to turn $100 into serious gains during the 2025 bull run, you need a smart strategy, one that maximizes profits while minimizing risk. Here's how to do it. 1. Diversify, but don't overdo it. Instead of betting everything on one coin, spread your investment across 3 to 5 solid projects. This way, you increase your chances of hitting a major winner while protecting yourself if one coin underperforms. A good split might look like 50% in Bitcoin and Ethereum, the safest long-term plays. 30% in strong altcoins like Solana or Avalanche, high upside potential. 20% in smaller, high-risk coins, the potential 100x gems. 2. Use dollar cost averaging, DCA. Instead of investing your entire $100 at once, buy in small amounts over time. Crypto is volatile, and prices swing wildly. DCA helps you avoid buying at the top and lowers your average cost over time. Even with just $10 per week, you can build a solid position. 3. Take profits on the way up. Most investors get greedy and hold until it's too late. The best strategy? Sell in portions as your coins pump. If an altcoin does a 10x, consider selling 20 to 30% to lock in profits. That way, you secure gains while keeping a position in case it keeps going higher. 4. Stay updated and adapt. Crypto moves fast. The projects that look strong today might be irrelevant 6 months from now. Follow the latest news, check on-chain data, and be ready to adjust your portfolio when needed. 5. Never invest more than you can afford to lose. This is the golden rule of crypto investing. While $100 won't break the bank, always remember, crypto is high risk, high reward. Only invest money you're willing to lose, and don't let FOMO drive your decisions. Now, while gains are exciting, the crypto market is ruthless. If you don't manage risks properly, you could lose everything just as fast as you make it. Let's talk about how to protect yourself. Crypto has made plenty of millionaires, but it's also wiped out countless investors who ignored the risks. If you want to survive the 2025 bull run and actually keep your profits, you need to be smart about risk management. Here's what you need to watch out for. 1. The market crashes hard, always. Every bull run eventually comes to an end. Bitcoin has crashed by 80% plus multiple times in history, dragging the entire market down with it. If you don't have a plan, you could watch your gains disappear overnight. Solution: take profits on the way up. Don't try to time the absolute top. Sell in chunks when you hit major milestones like 2x, 5x, 10x gains. 2. Scams and AMP. Rug pulls are everywhere. The crypto space is full of fake projects, pump and dump schemes, and outright scams. Just because a coin is hyped up on Twitter or TikTok doesn't mean it's legit. Solution: stick to established projects with real use cases. If a coin promises insane returns with no risk, it's probably a scam. Always do your own research before investing. 3. Exchanges can go bankrupt. FTX, Celsius, Voyager, big exchanges have collapsed before, leaving users unable to withdraw their funds. Keeping all your crypto on an exchange is a disaster waiting to happen. Solution: move your crypto to a hardware or software wallet. If you're holding for the long term, self-custody is key to keeping your assets safe. 4. Emotional trading equals guaranteed losses. FOMO, fear of missing out, and panic selling kill portfolios. Many people buy the top because of hype, then sell the bottom out of fear, losing money both ways. Solution: have a clear strategy before you invest. Stick to your plan, ignore hype-driven decisions, and don't let emotions control your trades. 5. Regulatory changes can shake the market. Governments are still figuring out how to regulate crypto. If a country bans crypto or introduces strict laws, the market could react violently. Solution: stay informed on regulatory news, especially in major markets like the US, Europe, and Asia. Regulations can cause short-term panic, but often lead to long-term stability. Managing risks properly can be the difference between making life-changing money and losing it all. But how do you even get started if you're new to crypto? Let's break it down step by step.
Do you want to learn how to get familiar with crypto? You've heard about them before, but you've never considered having a real approach to them. Give me 30 seconds to convince you. Deposit $100 and get up to 50 USD in rewards. Verify your account, deposit, and start trading to maximize your bonuses. Are you still insecure? At Bybit, the more you deposit, the more you earn. With your first deposit and trade of just $500, you can get an instant $50 bonus. And if after all this I still haven't convinced you, I suggest you try the app. Because Bybit is not just an application, but a reality.
How to get started with just $100. You don't need thousands of dollars to succeed in crypto, just a solid plan. If you're starting with $100, here's exactly how to enter the market without wasting money or making rookie mistakes. Step 1. Choose the right exchange. Before buying anything, you need a secure and reliable crypto exchange. Avoid lesser-known platforms and stick to trusted names like Binance, best for low fees and a wide selection of altcoins. Coinbase, great for beginners, but slightly higher fees. Kraken, strong security and long-standing reputation. Always enable two-factor authentication to protect your account from hacks. Step 2. Buy crypto in small amounts. Instead of investing all $100 at once, use a dollar-cost averaging strategy, buying small amounts weekly or monthly to reduce risk. Example, if you have $100, start with $25 per week over a month. This prevents you from buying at the highest price and smooths out market volatility. Step 3. Pick the right cryptos. Since you're starting small, every dollar counts. A smart way to spread a $100 portfolio could look like this: 50% Bitcoin and AMP, Ethereum, low risk, steady growth; 30% strong altcoins, Solana, Avalanche, or Polygon; 20% high risk, high reward coins, potential 50x plus gems. Avoid meme coins unless you're comfortable with high volatility and potential losses. Step 4. Store your crypto safely. Never keep all your funds on an exchange. For long-term holding, consider software wallets, MetaMask, Trust Wallet, or Exodus for quick access. Hardware wallets, Ledger or Trezor for maximum security. Step 5. Stay patient and think long-term. Crypto rewards those who hold strong through market swings. Instead of checking prices every hour, focus on long-term trends, such as Bitcoin halvings, institutional adoption, and major partnerships. The bull run won't last forever, so have an exit strategy. Whether it's selling in parts or setting price targets, planning ahead will help you lock in profits before the market reverses. Now that you know how to get started, the real question is, how high could crypto go in 2025? Let's break down the most realistic price predictions. Every bull run pushes crypto to new highs, and 2025 is shaping up to be no different. But how high can Bitcoin, Ethereum, and altcoins actually go? Let's break it down based on past cycles, expert predictions, and key market factors. Bitcoin's potential price target. Bitcoin has followed a 4-year cycle, with each bull run happening about a year after the halving. Historically, in 2013, Bitcoin surged from $13 to $1,100, an 85x increase. In 2017, it jumped from $1,000 to $20,000, a 20x gain. In 2021, it moved from $10,000 to $69,000, a 7x rise. If the pattern continues, Bitcoin could realistically reach $150,000 to $250,000 in 2025. Some experts believe that with institutional adoption and ETFs, it could go even higher. Ethereum and the rise of Layer 2s. Ethereum has consistently followed Bitcoin, but with bigger percentage gains. With Ethereum 2.0 upgrades improving scalability and gas fees, many analysts predict ETH could hit $10,000 to $15,000 in 2025. Meanwhile, Layer 2 solutions like Arbitrum and Optimism are gaining traction, meaning some smaller projects built on Ethereum could outperform ETH itself. Altcoins with 10x to 100x potential. Not every altcoin will explode, but history shows that well-positioned projects can deliver massive returns. Here's where the biggest gains could come from. Solana, one of the fastest growing networks. If adoption continues, it could hit $500 plus. Avalanche, a strong competitor to Ethereum with potential to reach $200 plus. AI and AMP, Web3 coins. Projects like Render and Fetched AI are in growing sectors and could see major gains. For truly high-risk, high-reward plays, new and low-cap projects could still deliver 50x plus returns, but they require careful research and timing. Will there be a blow-off top? Every bull market eventually ends in a dramatic crash, and 2025 will likely be no different. In past cycles, Bitcoin peaked 12 to 18 months after the halving, followed by a steep drop. That means the smartest investors will take profits before the peak, rather than chasing unrealistic price targets. The question is, will you be ready to capitalize on the bull run, or will you get caught when the market reverses? Let's wrap things up with the key takeaways.
If you haven't already done so, visit our website. You will find the link in the description.